Now for a look at the movers this morning. Jenny Horne is with us, co-host of Next Gen Investing. We're looking at the big banks that have been in the slew of the thick of things reporting. Bank of America in focus. Tell us about that report. Good morning, Jenny.
Good morning, Nicole. And we've seen very different results from the bank, but I do say that I agree with Kevin, where the tone has overwhelmingly been optimistic, although that hasn't translated into gains thus far. So Bank of America did see about a 3% profit increase as in the second quarter of now this year, which the bank chalked up to a healthy economy. So I think hugely encouraging were some of the commentary we got from Bank of America. Profit came in around 89 cents a share. That was well ahead of last year's second quarter earnings that were 83 cents a share. Also did slightly beat forecasts. Revenue also climbed about 4% to $26.46 billion, slightly short of the expected $26.7 billion, but overall, Wall Street banks have really benefited in the quarter from market volatility that has been spurred on from Trump's very volatile April, as we all can very, very well recall. But the subsequent months of escalating trade wars also did lead to this increased client trading, as well as corporate borrowing and foreign exchange work, though slowed deal making was more than originally had been anticipated. So revenues from trading were about $5.3 billion. That was up 14% year over year. It does also mark the 13th consecutive quarter of year over year revenue growth for that various division at Bank of America, which is amazing. So investment banking fees also did come in around $1.5 billion. That was actually lower than a year ago, slightly, which a year ago was around $1.6 billion. Net interest income, though, hugely watched mark for all these banks, did also total around $14.7 billion. The fourth quarter in a row, actually, that the bank was able to see its profits from lending that actually have risen. So that's huge. Its sprawling consumer bank also did see income rise about 15%, also boosted by that net interest income. And their CEO did say overall, this is because the economy is just doing better than perhaps had been feared, and consumer overall spending remained resilient. I think that this is as optimistic as a read as you can find, frankly, on the health of the consumer, as well as just the banking industry really as a whole.
Right, understood. I mean, when we think about these banks, Goldman Sachs had a beat. Yesterday, you reported on so many of those names that really had good news. I mean, the takeaway here thus far is we've seen a lot of trading revenue. Even for Wells Fargo, they removed the cap and assets, so that was some good news, even though Wells Fargo had some issues and turned negative. They are still back and forth, but the takeaway here has been pretty good, right?
Absolutely, it has. And I think that a lot of these banks, I was sort of forgetting that we discussed about this last quarter, but it seems like when it comes to the banks, also a lot of the move post earnings is dictated on how well you frame it. I mean, we have Citi, for example, yesterday was our green shoot of the entire session, really without waning, because they were the most optimistic of any of the other leaders on the big bank earnings calls. Same to be said about Bank of America this morning. We will obviously have to see where we open today, but a name that is looking a bit higher also finally gave us some bright spots of the economy to be excited about. Then on the other hand, you have CEO of course, JP Morgan, Jamie Dimon, who does say, yes, things were great this quarter, but, and I feel like that's his tone every quarter, and then we see shares slightly lower. So I think the reaction is oftentimes dictated on like how optimistic is your management and the commentary that follows, and we oftentimes overcomplicate it, but seemingly that was the theme last quarter and so far this quarter as well.
Right, understood. How about we turn our attention over to ASML, the semiconductor supply chain giant, is under a bit of pressure after the quarterly report. We heard so much about semis in the last 24 hours. What's the latest on ASML now?
Yes, so this is a name that I will say that's not the first time we've seen a massive gap to the downside on the back of earnings. It was actually now 2 or 3 quarters ago, technically, if you're including this one, that we saw a huge gap down on the back of earnings that actually dragged down a lot of its semiconductor peers. So I think that this is a great story of showing the difference of U.S.-based chip makers and some of these European or just foreign-based chip makers, because in ASML's case, they actually cited a lot of this tariff uncertainty and basically said, hey, we are still bracing for things to be worse than expected now in the end of this fiscal year, saying that they could not guarantee growth now in 2026. This company is a Dutch-based chip manufacturer, but I think, again, showing the ways in which the U.S.'s relationships with some of these foreign entities, it's not going to be everything is created equal. So we saw shares drop as much as 8% this morning after orders did still top about $6.4 billion for the company's chip-making machines, but also their CEO did say that growth right now is no longer guaranteed. So consensus forecasts had previously called for about 7% growth for the next year. Jefferies, though, was one that actually downgraded shares ahead of this report, saying they really can't see right now the overall thesis and where revenue stands to grow, and they were seemingly correct. So looking at 2026, their AI customer fundamentals, they did note, do still remain strong. At the same time, they do expect this increased uncertainty to drive a lot of the macro and geopolitical developments, saying that right now, therefore, they still prepare for growth in 2026, though they cannot confirm it at this stage. But ASML also did narrow its guidance for the year, now predicting sales to rise about 15%, having previously forecasted a wider, basically, scope of expectations. But U.S. tariffs have made it tough for a lot of these European companies to stand by their past profit guidance. Like President Donald Trump did still threaten these 30% levies on the European Union from August 1st, and that right now does still make it more expensive for some of these companies to do business, as well as right now waiting for some degree of hopefully a reprieve from the administration. So there's still that wait and see feeling when it comes to these European companies, but keep in mind, ASML, most of its business is exposed overseas. It's not necessarily the greatest read on what's happening here for U.S. chip making.
Okay, thank you for all of that. We're seeing only NVIDIA here on the screen with a slight up arrow after we've seen records there. Okay, ASML, Taiwan Semi, and we're looking at all the rest too. Jenny Horne, always covering the hot stocks to watch. Thank you so much.